Ladies and gentlemen, welcome back to the channel. I want to give you guys a margin call update, how you can start to see margin calls, why you would start to see margin calls, and really how we are on the edge of seeing massive margin calls in AMC stock. This is something that I think we're all looking forward to, and I don't think a lot of people realize just how close we are to actually seeing those. So I want to make it very clear here in this video, give you guys an update on where we currently sit. So let's get into it. Hit the like button and subscribe to the channel if you have not done so already. So with margin calls with AMC, you guys got to remember, it's really a collateral crisis. It all comes down to collateral, because a margin call, especially for the hedge funds, is simply, look, you need this much assets, right? Because your value has went down. That's essentially what a margin call is. If your portfolio drops under a certain level, you have to put up X amount of money or assets, or they're going to liquidate your position, and it takes a couple days, right? They give you a couple day notice. Now, institutional investors have a couple perks that retail investors do not have. Retail investors, when you get a margin call, they just want cash, right? They want you to deposit money into your portfolio, and that's the only way to service your margin call. Or you can, sell stock, but you got to sell a lot of stock. Now, with hedge funds, a little bit different. They can pledge securities. So they can pledge bonds. They can pledge high value stock, right? Your Apples, Microsofts, think Google, think Nvidia, think Tesla. Not your random penny stocks, not your mid-cap stocks, but your high quality collateral is pledgeable against AMC short positions, specifically AMC short positions, because when a stock has such a potential to squeeze and is ranked literally the most squeezable stock in the stock market by S3 Partners and by all these other sources, there's a lot of risk being short in AMC, and a stock can go up into infinity basically, right? So you can lose endless amounts of money. So as AMC goes up and down, as cost to borrow rates fluctuate, then these institutions, these lenders of stock, require you to deposit more collateral. And what you have started to see recently, and this is really the update part of it, stocks like Apple taking massive hits, and it's all technicals, right? Apple was down 1.2% on Friday. And what it is this. This has been a clear technical pattern for Apple, and you have fallen anywhere from 8% on the low end to 15% to 20% on a medium range, and then 35% on these large drops from peak to low. And it usually takes about 2 months. And just like clockwork, you hit that and boom, now you're selling off. And there was no news on Friday to cause this with Apple. And I do believe Apple is highly collateralized against AMC. So if you start to see the markets actually fall in this upcoming week, you might start to see AMC outperform as well. We've seen that over the past couple of weeks a little bit more, where the markets will be down and AMC stock will be up. I think it has to do with the collateral. Now, why are margin calls actually so close? And I think that's something that a lot of people don't fully understand. Well, a couple key details here. Live short interest off free float, highest level it's been at since forever, right? 26.32%, forever meaning since this whole movement started. You have not been this high. You're 3% higher than where you were at June of 2021 when AMC stock 10x'd in value. 136 million shares that are currently sold short, and AMC is on the threshold securities list. So obviously someone somewhere doesn't like to close out their positions, right? Well, why is AMC continuously on the threshold securities list? Why is there so many FTDs? Well, somebody doesn't want to close out those positions. Someone doesn't want to fulfill their obligation of their contract, right? That's why you're on the threshold securities list. There's a lot of hesitation, and I think shorts are getting exhausted at this point. Like their capital is starting to get exhausted, and if they have to try to pull funds from different places. Now, the main story really, if you want to boil all of this down, is those cost to borrow fees. Now, we looked at this in the last video, but I just want to make sure that everyone is on the same page. If you look at the days out on loan, the average days out on loan, if we go ahead right there, the shares out on loan has remained pretty high at around 200, as you can see from that line we just put up. The average days out on loan right here, you're at the highest levels that you have seen literally ever since this trade started. You're at about 112 days that are out on loan, right? So these cost to borrow rates, I don't know if we can go ahead and I don't believe there's a cost to borrow rate right here. Yeah, there actually is. So cost to borrow rate and the days out on loan. That's what I want to keep up here. So look at that, right? The average days out on loan, if it's 100 plus, well, where were you at about 100 days ago? I mean, you were pretty damn high, right? Cost to borrow rates from Ortex at the time were in the 200, 300% range, and that makes sense why shorts have lost $1.91 billion since the start of 2023. It all makes sense. The cost to borrow rates, and not to mention the $1.91 billion that shorts have lost to cost to borrow fees alone. You're also seeing AMC is up about 30% year to date, right? And this is when a lot of that short interest really started to populate, was a lot lower, like 30, 60 days ago, when these cost to borrow rates were higher than even where they are now, which where they are now is absolutely insane. The 300-ish% range. It's telling you something. The shorts need to see some kind of definitive move down very shortly, or those margin calls are coming, and they're coming in hot and heavy. And this week on April 25th, you're going to have a court hearing by Judge Zern. Now, Judge Zern, I put a very low probability on this being the last court date. This just going open for questions, and AMC can do the reverse split. They lift the status quo order. I put a very low probability on that. I think Zern is a very smart woman, and she's been around a while, and she knows the fraud, manipulation, and illegal practice that took place with AMC taking away common stockholders' voting power and literally selling them away. I think she sees that. And I think the only way to remedy that is to have another vote, or to outright say that this is not going to happen. You're not doing the reverse split. So I think both of those things trigger AMC stock to rally, and that subsequently triggers margin calls. Because to a certain point, what's the risk to reward profile of AMC as every day goes and goes, then your risk to reward starts to make no sense at all. Even more so than it did before, because this whole arbitrage trade, you're only going to make like 100 to 150% in the best case scenario. But you're losing, $1.91 billion, 3 times the amount that is currently sold toward an AMC in 3 months. You can't make that trade make sense. You can't make those numbers make sense. So I think this next upcoming week for the hedge funds is really now or never. It's either going to fall, AMC is going to fall, or not. And if it does not, that's where you start to get some massive margin calls right around the corner. And Just to give you guys a look at the overall numbers with AMC, you could see $678 million worth of short positions in AMC, 26.42% short interest on free float. Free float out on loan, 37.45%. Shares out on loan, 193.4 million. Days to cover was sitting at about 5. Cost to borrow average 3 months, 241.69%, and 100% share utilization. So if we do start to see margin calls this week, we'll update you guys, but I think AMC could make a lot of us very happy. Now, it all depends on what the judge does say, so keep that in mind. And once we get closer to Tuesday, give it Monday, and then Tuesday you're gonna see a big move. Don't be fooled. You're gonna see a big move. So if you have a lot of positioning, if you have a lot of options, then you want to be a little bit careful around that time, especially if anyone out there has any puts. Could get pretty ugly for those pretty quickly, in my personal opinion. Keep in mind, I'm not a financial advisor. Come to your own conclusions, do your own due diligence, all of that. Yeah, but that's my update on where we sit with the margin calls. If the broad markets continue to fall based off of earnings in this upcoming week, and AMC stock can actually catch a rally, I would be shocked to not see margin calls. And both of those things are my base case. I think the markets do fall this week when you get deeper into earnings season. I think AMC stock does rally next week. That leads to margin calls. That leads to shorts covering on their short position. So that is going to do it for this video. Hit the like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Thank you guys for watching, and I will see you in the next one.